Welcome to the Central Bank of Kuwait's podcast, where the objective is to raise awareness to key economics concepts and developments which affect the lives of individuals and the society as a whole. I am Mariam Mugayan from the Central Bank of Kuwait to discuss the reality of e-payment services and the role of the Central Bank of Kuwait in encouraging this sector and providing an environment conducive to its development. Our guest today is Fatma Al-Gharib, Senior Payment System Supervisor in the Digital Operations and Financial Technologies Supervision Department. Before we dive deep into the subject, give us a brief introduction to the electronic payment of funds.
First of all, allow me to welcome you, Mariam, and our listeners. Studies have shown a link between a country's level of economic development and the advancement of its payment system, where the development of e-payment of funds contributes to easier customer access to products and services, and it is also important for the product or service provider. Development in e-payment services benefits both supply and demand, thus contributing to economic development. As for the definition of e-payment of funds, it is the transfer and payment of funds via electronic means, whether through physical devices such as the point-of-sale devices or non-physical platforms such as e-wallets, e-payment gateways, etc.
Do e-payment systems exist in the forms introduced in recent years only?
The financial system in the state of Kuwait is the oldest in the region and is among the most active and most successful sectors. Therefore, had always been keen to provide the latest introduced services as swiftly as possible. For instance, Shared Electronic Banking Services Company, KNET, was established in 1992 and was the first of its kind in the region. The banking sector had also provided ATM services since 1979 and initiated banking services through the internet and mobile phones back in 1998.
Speaking of the financial system, are there other systems that are fully managed and operated by the Central Bank of Kuwait?
Yes, and those are Kuwait Real-Time Gross Settlement System, through which settlements among banks are executed, and Kuwait Electronic Check Clearing System, which handles checks in Kuwaiti dinar electronically among local banks, and had been introduced as substitute for the manual system in 2015. Lastly, we have the Electronic Banking Services System, which was launched in 2019, and allows state bodies to carry out transfers and settle government payments electronically on their accounts with the Central Bank of Kuwait. We've also seen immense technological advancement in recent years, such as the debut of several Kuwaiti companies that offer e-payment services and other electronic services. There is also Law Number 20 of 2014 concerning electronic transaction, which gives the Central Bank of Kuwait full capacities to supervise and monitor services for e-payment of funds, and to issue binding instructions in this respect. It was virtue of this law that the Central Bank of Kuwait had first started preparations for drawing out supervisory instructions and regulatory frameworks for e-payment services that were issued in 2018.
Surely, e-payment systems in Kuwait have evolved since 2018, and new services are now offered, and more companies had been established in the field of fintech. Which leads to the question, how is the Central Bank of Kuwait following up?
Of course, Mariam, fast-paced technological advancement and services based on fintech are always a focal point of interest at the Central Bank of Kuwait. And we had been keen on following up on the implementation of the instructions issued in 2018 and discerning their impact and areas for possible development. The Central Bank of Kuwait therefore issued its instructions on regulating the electronic payment of fund in its final form in May 2023.
Can you shed light on the main points mentioned in the Central Bank of Kuwait instructions issued in May 2023?
There are many aspects addressed by the updated instructions. For example, stating that the regulatory and supervisory requirements must be proportionate to the volume and nature of an activity. The instructions also specify the regulatory requirements to be satisfied by both existing and newly established financial institutions to engage in activity in the areas of e-payment, e-money, or operation of e-payment systems under 5 types of licensing befitting the volume and nature of the activity. Furthermore, to ensure smooth running and success of institutions concerned in offering financial services that contribute to the development of the national economy, the instructions included a set of regulatory controls that are binding throughout the period of engagement in these activities.
It's noticeable that the latest instructions allow for new services in the field of fintech.
Indeed, Mariam, these instructions opens the door for new services that introduces new methods of payment such as buy now, pay later.
Can you explain the nature of this service? And was it covered by the recent instructions because of its wide use of service seen recently? And if you could please explain more about this service.
The Buy Now, Pay Later is a payment service for individuals for the purpose of purchasing consumer goods and paying for them later through a payment transaction, which is performed by any of the electronic payment methods for the merchant, whether through point of sale or e-payment gateways, all within a specific regulatory and supervisory framework. Customers are able to pay for the purchases in installments over a period not exceeding 4 months, where the sum does not exceed 500 KD and no interest nor profit is applied.
Lastly, does the responsibility end with the service provider, or is there a role for the individuals in protecting their funds when using the electronic payment devices?
I think this would be the perfect point on which to wrap our discussion. We must remind all that one of the most important advantages of e-payment is ease and swiftness. Therefore, we see that all security measures and controls stress on smooth operation, while ensuring accurate verification of customer identity. However, if a customer discloses confidential information such as PIN code or OTP, this speed and ease of transaction turns from a plus to a problem as the customer becomes easier to scam. Accordingly, the Central Bank of Kuwait, in cooperation with the banking sector, runs continuous campaigns to increase public awareness on the risk of electronic financial fraud. I recommend that listeners visit the campaign website dirayakw.com for more information on this topic and other topics related to financial awareness.
Many thanks to Fatima Al-Gharib for joining us today. This brings us to the end of our podcast. Thanks for listening.